Hello, traders. This is General Romulus, coming to you live from the Forum in ancient Rome. We've got something big happening right now. Well, at least it looked like that for a short while yesterday. The biggest company in the world, yes, NVIDIA, did come out with their earnings. We posted a short video about that yesterday, 2 days ago rather, and what we looked at, what we showed, what we speculated might happen pretty much came to pass. We'll do a quick follow through on that, plus something much more potentially profitable for a couple of weeks that I think is going to be helpful to many of you out there. So let's get into it. It's a Tuesday morning. We drew this line, this yellow line, on the top of some areas where NVIDIA has been trading up to and then falling away from. That, well, quite simply is called a resistance line. And I don't need to get into why it's called that. Price is rejected several times at the approximate 195 area without setting new significant lows, bouncing off of near the 200-day moving average a few weeks ago. This pattern that we talked about is an inverse head and shoulders, also possibly an ascending triangle. Both patterns, typically at least and by the textbooks, have a bullish or an upside resolution. And we can measure that using some of the math involved in the price movement of recent past and give an upside target of about $210 a share, slightly above its all-time high that was set back at the end of October. We mentioned that you start to see some price action above this resistance line, volume coming in, that could be the spark to drive it higher. We saw that yesterday before the earnings came out, and now they're out. The stock is bumping up a little more, not tremendously, but a little more, and that's kind of, I'm sure, a bit of a letdown for a lot of traders and investors. After all, NVIDIA, not only did they beat the estimates on the revenue and earnings side, but they raised the guidance, and they have a new product coming out more toward the end of the year that the big hyperscalers, the Metas and Amazons and Googles of the world, even though they're making their own chips, they're also buying, they're placing tons of advanced orders for NVIDIA's new product, again, launching at the end of this year. This is telling me that the stock does have the potential to kind of challenge these highs back in October, not perhaps that $210 ultimate target. However, some considerable more upside potentially coming between now and the end of the quarter. So 5 weeks. Now, as always, remember this video and all videos posted from General Romulus is for educational, perhaps informational, maybe even entertainment purposes only. I'm not your financial advisor or broker, nor will I become that. And as I move through the eons, the centuries, the decades, the years of trading and investing, my ultimate goal, as always, is to find consistent returns regardless of market direction. Okay, so the next thing I want to go into, this one is going to be more detailed and perhaps a little nerdy for some. If there are any descriptions, phrases, words that you do not fully understand, you want more explanation about, you can always email me directly, romulusteaches@yahoo.com. Again, romulusteaches@yahoo.com. That's the best way to reach me out there. And regarding this video that you are about to see, please hit that subscribe button if you haven't already. Share this video because we are going to get into some things that you will not find anywhere else on planet Earth. Again, you will not find this stuff anywhere else on planet Earth. So for most of this calendar year, even bleeding back into the end of the latter part of 2025, there's been a virtual digital and stock market bloodbath in a couple of areas, and they're calling it the AI scare trade. Microsoft has been the most prominent victim of this. You know, they're heavily involved in producing a lot of the products that come out of the AI world into consumer and business use. There are many other companies involved in this type of work. Microsoft is simply the largest one. And what has been talked about is they're creating this software that's utilizing AI that's going to then turn around and allow us, commercial and retail users, not to have to buy any more software products from Microsoft. So in other words, they're creating their own demise. They're making the monsters that are going to go ahead and eat their business and destroy them over the long term. The AI scare trade, which is why these stocks got absolutely hammered over the last several months. We saw the AI scare trade slip into the financial sector recently, and then it got into, about a week or two ago, the transportation and logistics grouping. But software has been the largest victim, I guess, of this. I mean, Microsoft here, check this out. The NASDAQ composite it's been trending consolidating sideways for a bit, several months, October 29th, since the last time it hit a new all-time high, unlike the Dow Jones, which was only a couple of weeks ago. And by the way, the S&P 500 is only less than 0.5% away as of right now from hitting a new all-time high. That's kind of surprising to many people, primarily because a lot of the big technology stocks, mostly led because of the software group and also cybersecurity, and we'll get into that in a moment, these stocks have not been performing well at all over the last several months. The AI scare trade has scared the traders and investors away from this area. Okay, now let's get into some details. We have the software companies, and a way to look at that easily is using an exchange-traded fund, and an ETF is just a basket that puts like-minded stocks together, birds of a feather kind of thing, into one stock that you can then trade at any given time. Okay, so the iShares Expanded Tech Software Sector Exchange-Traded Fund, average trading volume on this about 14.5 million shares every day, so it's a big liquid tradable security. You see this is, again, Microsoft is the largest component in here, and it's getting pummeled, hammered, smashed, week after week, almost day after day for several months. Puts in a low here a couple of weeks ago, big volume. People are spitting it out, a lot of supply. Look down here. The RSI 14 reaches its ultimate low of this correctional period on that same day on February 5th of just under 15. A few weeks later, the stock makes a new low, a new price low, again, on a huge volume surge, big capitulation, lots of selling going on. And what happens, however, down here, take a very close look. The RSI is not as low as what we saw on February 5th. Price is lower, the RSI is higher. That, everyone, is called a bullish divergence. Hey, say it with me in the old Roman style. Well, we won't speak Latin, we'll do it in English. Bullish divergence. But for those who are interested in the Latin, that is, divergentia bullosa. Divergentia bullosa. That's probably too much of a bad Italian accent. I don't know what the accents of the ancient Romans were, nor do probably any modern people. Okay, so we have a bullish divergence going on here in the software group. Let's look at Microsoft itself. The same thing exists. We have a bullish divergence, although not as extreme, inside of Microsoft. What about the cybersecurity stocks? Because they also have been hammered and pummeled. And we have stocks like Palo Alto that have been crushed by this. We have CrowdStrike getting hammered by this. Checkpoint, CHKP, Checkpoint Software, OKTA, Okta Incorporated, that got hammered by this there. And then, of course, now ServiceNow does in both software and security. Every single one of these stocks, however, after getting pummeled, they all put in lower price lows and a bullish divergence with the RSI. That is very important. Not only that, you look at Bug as well, which is the exchange-traded fund grouping up the cybersecurity stocks. Not only do we have this bullish divergence, we also have the selling climax right here on February 23rd, a couple of days ago, followed by what we see kind of across the board, a new low in price in the morning, and then just an explosion of volume upside. Price closed up a little bit, but the volume was important. So it seems like this stuff has been puked up. It seems as if we've got a selling climax of at least short to intermediate term proportions. That's important. Now, taking a look at Bitcoin and a lot of the major cryptocurrencies, we see something similar here. Okay, Bitcoin it doesn't put in a new low. That's kind of a double bottom in there that hasn't been fulfilled yet. It's got to break above about 71,000 almost in order to fulfill its double bottom promise. However, we see the bullish divergences. See the price and RSI match here. Price pretty much the same low. We'll call it good. And we have a bullish divergence in the RSI. So we see momentum starting to change. We see it getting a little more bullish. We don't see downtrend lines broken yet, and I don't know if that's going to happen. I'll explain to you why in just a moment. The volume trends inside of the software and check security companies, cybersecurity companies, is telling us that everyone who wanted to sell sold. There's simply nobody left. Now, when we combine that with price action, the bullish divergence, and the sentiment, ask around. Go ahead and do your own little survey, or look it up in more detail throughout the internet and the analyst professional trading community. Just about everybody's convinced that these software companies are dead, that it's over for them. Same thing with the cybersecurity lot. And that probably will not be the case. I don't have a long-term opinion on any of this. And really, no, I don't care. I'm looking at more of a shorter term, possibly intermediate term situation. Okay, now, what about a long-term deal? Why can't these stocks rally for several months, even years? Why haven't we put in a truly sustainable low that could lead to something dramatically higher over coming weeks, months, or years? I'll tell you why. Because we have not seen at the lows of the last few trading days, however, any sort of insider buying in any of these companies. And it doesn't matter if we're talking about the software or the cybersecurity lot. You can look at Microsoft, and I'll show you this in a second. You can look at the CrowdStrikes, Palantir, which is a big member of this community, Adobe. None of these companies had any insider buying, like not even a stitch. Well, a very small amount that we'll uncover in Microsoft, but a very small amount. All right, so here's CrowdStrike. You see when it's pink or any other color beside green, that means there's no insider buying. No insider buying there. Palantir, no insider buying there. Adobe, no insider buying. Well, let's see. Come on, Adobe. Let's try it again. Click it again. ADB. I can't seem to get that to go. All right, we'll try it again. ADBE. Notice no insider buying going on there. So the last insider buying, you see this is the green one, was almost a year ago in Adobe stock. Okay. We have Salesforce.com, another company that's been hammered recently. And last insider buying there was middle of December, so really before the rout kind of got started. And we can go around the horn here as we check on them. ServiceNow, another company, no insider buying. And here's just a little bit in Microsoft that we mentioned. So this is what I'm looking at here. There was one little buy in Microsoft of 5,000 shares from a director, John, standing into these lows. That's not it. That's not what you want to see. And that's not what you normally see when it comes to major lows. Major lows in the broad stock market, think 2003, 2009, COVID lows, February, March, April 2020, those types of moves, late 2022. You see a lot of insider buying across the board. Insiders we're talking corporate executives, some of the top ranking officers in the companies, they have to hold these stocks for at least 6 months. So if they're going to buy, they believe there's going to be a sustainable upside move, and we're not seeing any buying going on. So that tells me that, nope, we're not going to get what a lot of people are hoping and praying for to help them bring back their money that they've lost over the last several months. But I believe we can get a run of the 50-day moving averages in these stocks, which if you look at the software ETF, that's quite a bit higher than here. You look at the cybersecurity group, quite a bit higher than here. You can use Microsoft as the main bellwether and lead on that, quite a bit higher than here. And even Bitcoin and the cryptos, a little bit. I believe Bitcoin runs into first trouble if it does keep going at 75,000, and then that 50-day at 78 or 79,000, depending on how long it takes to get there, if it does get there at all. Okay, I mentioned this was going to be a little bit of a longer nerdy session. Hope I didn't bore you. I've got to get back to ancient Rome. My chariot awaits. Thank you so much for joining me. Again, Romulus teaches at yahoo.com to contact me anytime. And if you really want to do this right over the long term, you've got to start believing in your ability to find and provide consistent returns regardless of market direction. Because, hey, in ancient Rome, guess what? That's how we do it. Bye-bye.